Hey, this is Matt from Investing One. Today is Friday, March 20th, 2020. Yesterday, the markets firmed up a little bit and they are seeing stronger action into the overnight session. NASDAQ actually hit its limit up level. ES did not quite make it up there, but all four of the indices are pushing or testing higher at least in the overnight session. So we are gapping up today being Friday, March 20th. That means it is OPEX day. So let's take a look at gapping up on OPEX day. So let me select ES, NASDAQ, YM, and Russell. I'm going to keep the setup here as intraday open. That is an entry at 9:30 a.m. Eastern Time. Trade type, I'm going to keep this set as long. The exit is set to end of day stop, end of day target. So that means it is exiting at 4:15 p.m. Eastern Time. We are gapping up this morning. I'm going to click gap up here, and then I am going to go to market events and go to market events. Options expiration day. Here it is. I'm going to click equals next to that to add that to the test and view results. These results will be for going long at the open of regular trading hours, 9:30 a.m. Eastern Time, when gapping up on options expiration day, exiting at the close of regular trading hours, 4:15 p.m. Eastern Time. So you can see, looking at this, historically, it's been fairly bearish. It's flattened out a bit over the past, 5-ish years or so. You can see the equity curves and most of them kind of diverging a little bit, with NASDAQ there in the orange. Let me highlight that real quick. You can see NASDAQ's been the most consistently weak one. The others have kind of flattened out a bit. That's the ES here in the blue, YM in the green, Russell in the red. But we've seen a little bit of divergence between the four indices here recently. But overall, looking at some stats of win rates for going long, they are all less than 50%, with good sample sizes in each, because this is looking back to 2003, every options expiration day that is gapped up. All of those, 44 or less, NASDAQ kind of leading the way to the downside. Only 37% of those have been winners historically. So I want to do one more thing here. We do see there is a bearish bias there in those numbers. I want to go ahead and confirm that that is still true in a bearish environment. Most of those samples are not in a bearish environment, and that can often be different. But for this one, we're going to put it below a 10-day moving average and below a 200-day moving average. So that'll be a more bearish environment. And look at the stats again. When we do that, we don't get as many samples. Of course, most of those were happening in more bullish or sideways environments. The more bearish environments, though, looking at the win rates, look pretty similar. Most of them, ES, NASDAQ, YM, are a touch weaker in the bearish environment. The Russell's kind of doing its own thing over there. But they're all in that same ballpark. Maybe a little bit weaker, could be due to the slightly or the smaller sample sizes. So it's a little bit easier to change a win rate in a smaller sample size. But it looks like they are bearish as well. So gapping up on OPEX historically in these two cases have been a more bearish environment for entering long at the open and exiting at the close. So I hope you found that interesting. As a reminder, we will be doing a webinar on Wednesday of next week. That is Wednesday, March 25th. So mark that on your calendars, and we'll do a webinar after the close of trading and look at some bearish market environment stuff, isolating some patterns environments that might be better to trade with in this environment. So we will see you next week. Good luck today. We'll see you then.